Welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast, and not just from one accountant's perspective. I'm one of your hosts, AJ Wheeler, and with me, as always, is Mark Palardy.
Hey, everyone.
Great episode today. We have a couple articles and a question. So our first article is, Can Philanthropy Save Our National Parks? We'll take a look at how the unique kind of relationship between national park programs and private nonprofits, and how that blending, and maybe some suggestions on how it can work better. And then we have a report actually from the Nonprofit Council, and it goes into the scope and impact of nonprofit work shortages. Is your nonprofit experiencing hiring problems or staff shortages? Well, you're not alone. And we dive into this really interesting report and summary from the Nonprofit Council on what the shortages are like around the nation, and some suggestions on maybe how you can come out of this staffing shortage during the Great Resignation era. And I think it's a really good article. We'll discuss it further in the episode. And then our last article for the week is experts see red flags at nonprofit raising big money for Capitol riot defendants. So this is kind of an article that delves into what these red flags are around these defense fund nonprofits that people are raising for the defense of people charged in the Capitol riots that happened a year ago, as we record this in January of 2022. But we'll talk about that and how it might apply to regular nonprofits and what the impact is for non-political, I guess, politically charged nonprofits. We'll dive into all of that. And then our question for the week is, where is the line between restricted and unrestricted for accounting purposes when it comes to grants and donations? So we'll dive in and let this viewer know what we think is considered restricted and unrestricted when it comes to grants and donations, how you should be tracking it, what you should be tracking, and why you should be tracking it. But all that ahead in the episode. Mark, you've got our first article for us. Take it away.
Yeah, thanks, AJ. The first article is by Jonathan Hanna, and it's called, Can Philanthropy Save Our National Parks? So this is an interesting prospect idea from this gentleman who talks about how national parks are starting to really suffer from overcrowding, overuse, and they've grown so much in the past 100 years since a lot of these were created that really it becomes a less than pleasant experience. And this author thinks that there are some philanthropists that could come in and help make the experience better. From somebody who actually has gone to some of these national parks, it's like you go to the national parks to see other tourists rather than even see the landscape sometimes. But he comes across from two big ideas. First, he goes kind of into the history of national parks and talks about how like large acres were donated in years past by some of these great wealthy land barons like the Rockefellers, et cetera. Talks about how the Grand Tetons were formed based on land donated by the Rockefellers. We don't necessarily need to go into the fact that land was probably not the Rockefellers to begin with. But regardless, they created this national park over there. And so he's suggesting that some of the problems that we have in our current national park system could be addressed. For example, the parking and the influx of cars that go to national parks right now. Because if you try to go to a national park, sometimes you're waiting hours in line to get in, and then you get in and it's just these gigantic parking lots filled with cars where you're driving around. I've had this happen to me at Glacier National Park, just driving around trying to find parking to get to a trailhead to go hike out with hundreds of other people. And he's suggesting if some of these philanthropists would contribute to some of the infrastructure costs and help create like a transportation system. He talked about maybe a train system or a tram system, or some electric shuttles that they're trying to roll out in Yellowstone to actually mitigate some of the traffic and get people in there and more comfortable. I think it's a fantastic idea. You just have to get some people on board. One of the other pieces that he talks about are within each of these national parks, there tend to be lodges. And if you've been to any of these national parks like Yosemite, Yellowstone, et cetera, there are these beautiful log, cabins that are like gigantic lodges that are multi-storied, made out of cut logs, and they have rooms within them. But in order to reserve these rooms, you're sometimes having to reserve more than a year out in order to get some of these rooms, because there's such a lack of space. And, even though in the past 60 years, the amount of visitors that have gone into parks has increased threefold, this lodge space hasn't increased at all. So it becomes a rarer and rarer commodity, and they're managed by outside services, and the prices are even controlled by the national park. So they're not ridiculously expensive. So his idea is that the philanthropists could help with some internal park lodging and help create some more of these lodges, because certainly having not one created in the past 60 years, we're behind the times, and we could maybe trade out some of this parking lot space for some lodge space and give some people some more direct access and let them stay the night in some of these national parks. So I thought these were both great ideas. I think there's many other ideas that are out there on the table, and getting some of these philanthropists involved in national parks is, why not? Right? We got some Bezos money out there. What do you think, AJ?
No, I think the article is well written, and I think he does a good job of like delving into the history of the parks and kind of where they sit now. I think even on a local level, so private philanthropy, or I guess nonprofits helping public kind of lands is not new. Like when I was an auditor, we're in Oregon, so we're kind of a bunch of tree huggers out here anyway, but you would have like friends of whatever park, or friends of or like wetlands conservancy that would keep wetland areas, and they would, and it functions very much. The nonprofit, like the Wetlands Conservancy, would function very similarly to the way National Park does. They have private land donations of people that own essentially a wetlands, and it's a weird thing. They can't build on it because it's designated as a wetland and needs to be conserved, but they own this land. What are they supposed to do with it? And they try to develop on it and they can't. And so then they end up donating it to this conservancy, and this conservancy holds title to the land in perpetuity, and it pledges to keep it up and maintain it. So you have this weird mix of public and governmental kind of national parks that happen, and then you have a state kind of parks. Like if you're in Portland, we have like Washington Park, which is huge and it's maintained by the city. But often when you're talking about those either city or federal like parks, or nature conservancies or anything like that are fueled by taxpayer money, it's often very difficult to get the amount of like traction, updating it, like with the respects to the lodge. The government funds enough for you to keep it running and not necessarily to expand or to do anything with it, because they essentially see it as, it's a sunk cost, and it's kind of like on a kind of a side ledger that happens because there's no tax revenue driven off of these park entrances or anything like that. It's essentially really is a public good and an environmental good. So what has happened since those parks have come around is you have this interesting mix of public and private money coming together to be able to support these parks and do that. So it's not a new concept, I don't think, but I'm glad somebody's bringing it up, because I don't think it's one that's often talked about. The interesting thing, though, is if you're a nonprofit that supports, say, like a public park or a national park, the interesting kind of conundrum there is what part of your revenue and expenses is considered fundraising and which part of it is like a program. Because you're fundraising all the time to support these parks. That's the only reason your nonprofit exists. And there's this weird dichotomy of what's considered fundraising expense in your, in your functional expense statement, what's considered fundraising expense and what's considered program expense, or fundraising revenue versus, regular program revenue, because essentially you're fundraising all the time. That's the reason you're there, to support this park. So one of the helpful things that I would say is, if you're fundraising to support the park, that would be considered a program expense. If you're fundraising to support like admin or unconditional kind of money coming in, that would be considered fundraising. So It's a gray area that's really difficult, and I would have to have a conversation with those organizations every year of how they would delineate between what was fundraising expense and what was considered like program expense.
Yeah, some good points there, AJ. I think national parks are a treasure for all U.S. citizens and anybody visiting. They're actually a big draw for tourists as well. So I think looking at ways to enhance the experience, right? If enough tourists come over and they have a miserable experience and they're waiting 4 hours in line to get in and they're, just there with a ton of other tourists, right? I mean, and truly, if you actually go to a national park and you try to get off the beaten path, right? You don't go to the exact main area where everybody is. You're going to find the beauty and the solitude and all of that everywhere. The things that the national parks were created for in the first place. So, figuring out how to support them, whether it be philanthropists, whether it be other organizations, I personally think is very important. And, getting out into some of the beauty that our country holds is, it's one of the joys of living here. So, as we pipe in the tunes, God Bless America behind my words, I'm going to throw it over to HA for the second article.
Yeah, thanks so much. This is Mark. This is actually less of an article, more of an updated analysis from the National Council of Nonprofits. And it's addressing the scope and impact of nonprofit workforce shortages. We'll have a link down to the report itself, and I would really recommend any nonprofit operators out there or anybody that's involved with a nonprofit to really look at it, because I think what you'll find is your woes are not just in your sector or in your area or in your nonprofit. If you're experiencing staff shortages, it's really going on throughout the country. And they surveyed responses from more than 1,000 nonprofits from all 50 states. So this wasn't like a geographically locked, and I think the sample size is pretty robust for the type of survey that was done. You could argue, I guess, they had to be a part of the National Council or whatever, but I think realistically, this is probably one of the better statistical analysis I've seen of this workplace shortage. So the whole thing is about 18 pages long, but it's really in depth and goes into a lot of good points. We'll cover some of like the highlights here. So what I found really interesting, and what kind of, I guess, didn't make me feel better, but it kind of put into perspective that the woes in hiring and staff shortages that we're seeing in the nonprofits that I work with is not unique to just them or their sector. And in fact, only 24% of the reported vacancies were between 0 and 9%. All the rest of the nonprofit respondents responded that they, so you're talking about almost 75% or 76% having vacancies above 10%. So, and there were another 16% reported that there was vacancies over 30%. So staffing shortages are abound. And they kind of got into they're asking the causes for them. And essentially, salary competition was the one that was most likely cited, with almost 80% of the respondents saying that it was salary competition as a factor for providing them with filling job openings. And a quarter of them said, the inability to find childcare. With the pandemic and essentially the on and off switch of in-person learning versus at home distance learning has made it very difficult for a working parent to be able to go into work. If you don't have a remote setup or you have some kind of job that requires you to be in person, can make it very difficult. And then actually, this was surprising. Vaccination policies, nearly 1 in 5 respondents said that. So I think a lot, this, of course, coupled with the great resignation or era that we've seen where people are quitting their jobs looking for something better, I think it really kind of hones in that nonprofits weren't immune to this either. And I think to highlight something in talking about salaries here, a lot of nonprofits work and they submit budgets for proposals. So say you had like a 2-year grant that started in 2020 that ends in 2022, you had to give salary kind of requirements and what your payroll would be during that time. It's very difficult for a nonprofit to then raise wages to try and meet workers, underpaid workers now, because it's a losing prospect. You have to go back and get the grant amended and ask for more money. And often, if it's a governmental agency, they have carved out that from their biannual budget of 2 years, and they don't have any money left to be able to give you additional funds to support raises in your employees to keep them. So it's kind of I don't want to be all doom and gloom here. I think, there'll be a cooling off period here. And I think essentially, I think, competitive fundraising environment, created a productive hybrid schedule, and created guidelines that work with vaccinated and non-vaccinated staff is kind of what one operator from the Pacific Northwest summed up the frustrations, kind of. So I think addressing like stress and competitors for qualified applicants, addressing, your pay stuff. And I think being able to work with your staff to understand why people are leaving or what the driving force is for why you don't have either employee retention or new people coming in is probably vital. But I probably rambled on enough here, Mark. I'd love to get your insight on this report.
Yeah, this is a really rich and deep report. And I do encourage anybody out there working at a nonprofit, even if you aren't having the hiring problems, it's really interesting to see some of these factors that are, causing problems in recruiting and some of the other kind of hidden factors that you may or may not be considering at this point. And one of the interesting pieces that the article talks about is, so what's the impact of all of this on their nonprofit, right? So they talk about how all of a sudden you're going to have a waiting list, or you're going to have a reduction in services, right? If you're an organization that's open a certain number of hours, you might have to shorten those hours that aren't so convenient to the public. Or if you have a certain number of housing vouchers or number of clients you can see as a result of this, you might have to have a waiting list for those services. And frankly, a lot of communities rely on these services, food banks, other things, not that we have to prioritize what our nonprofits are, but it's important to a community that nonprofit functionality is robust. And, like AJ was saying, if you can't be competitive in certain areas and you have a labor workforce who is just coming off of a pandemic. So A, they might be opposed to vaccination mandates, and B, they might just be scared of COVID, period, and not wanting to come back into the office. One of the other interesting pieces of this is they talked about volunteers, right? Because volunteers are the bread and butter of a ton of organizations, and you have volunteers who are subject to the exact same strictures, right? A lot of them tend to be older. They're very scared of getting COVID or putting themselves in an environment where they're more immune compromised. But on the other side, this might be in retirement, their social outlet. This might be where they get to interact with people of all ages in a nonprofit environment. So there's a real shortage of volunteers, and some nonprofits are having to hire for positions that volunteers used to take care of. Another piece of this really rich article or report that we're talking about is that the government is being pretty slow to catch up to what needs to happen here, right? And as we know, moving anything in the government is like moving the Titanic. It's a slow turn. So you have a lot of people who are on government grants who have to abide by the strictures of those government grants, but the government grants aren't recognizing, say, increases to minimum wage or, inflationary pressures. They're not increasing reimbursement schedules or other factors, which means that the nonprofit itself has to eat those costs. And all of this kind of jumbles in together and creates a stressful environment. So again, say it again, I recommend reading this because there's probably something, especially if you're working at a nonprofit, that applies to your specific industry. And there's a lot of good anecdotal evidence from all sorts of different parts of the country. And I appreciate that this report took nonprofits small and large and from all over the country to kind of ferret out what some of the commonalities and some of the problems we're facing. And, the article ends with some solutions and some so it ends on a positive note. So I don't want to just say, come on in here and be depressed. No, I mean, they talk about, engaging directly with funders and looking at some equity issues at the outset so that you're not caught flat-footed with that. and looking at some different programs that you can take advantage of in the nonprofit sphere, whether that be like, well, PPP is kind of come and gone, but there's still the employee retention credits. Sorry, so many different programs, it's hard to remember. But some of these ARPA funds, other government programs that not a lot of people, I think less than 25% they said were taking advantage of the employee retention credit. Well, that's some extra money for your nonprofit. So anyway, I'll get off my soapbox, but I really enjoyed this one, AJ.
Yeah, no, I thought it was a really great report. And I think, you took the words right out of my mouth there, kind of, I think, to boil down, I think what the report kind of says, and like, not to sound all doom and gloom on this, but, I think often when you're working in the trenches and you're having these labor shortages, especially when it affects your volunteers or your like frontline staff that is really performing the duties there, you can feel very like Mark mentioned, stressed and like really kind of in over your head, it feels like. But I thought that the kind of solutions they presented or what you can do about it were really good. And the one that I would really highlight is speak to your funders. These funders want you to perform the duties that they have granted you or contracted with you to do. And they're usually, we'll try to move some money around to be able to make that happen. If you're upfront and you have a good line of communication with them, I think that really matters a lot. And I would say to do the same thing on the staff side. Let them know that you're trying to increase wages and that you want to see this situation improve. And I think that goes a long way in morale. Often people can feel really bogged down if they've lost, coworkers, or they, haven't been able to hire support staff for that kind of, for their program. They can really feel bogged down with it. But yeah, I would, for the 100th time we've mentioned during this segment, please, give this report a look, because I think it's really robust, and we've done our best to cover it. But I think, there's so many good nuggets of information in there that I think everybody could benefit from. Click on the link in the description, or just search the nonprofit workforce analysis in December from the Nonprofit Council. Is that right? National Council of Nonprofits. So, Mark, you got our next article for us.
Yeah, you bet. And this one is kind of an audio article / written article as well. And this comes to us from National Public Radio. And it's some investigative journalism. Experts see red flags at nonprofit raising money for the Capitol riot defenders. So we're not going to get really into the politics of, what's happened with the January 6th, incursion, whatever. Even if I use language there, it gives away my feelings on that. But this is about a nonprofit that was started by people related to the Capitol defendants, if you will, to try to help garner some legal fees. And so far they have raised over $900,000, but there have been some questions as to the operations of their nonprofit. And that's kind of what I read this article for, because this is more about, this podcast tends to be us talking nonprofits and talking about the process of nonprofits and what we can learn, and what we can learn potentially from others' mistakes sometimes. So this might be a case such as this. So this nonprofit was started by a woman, Cynthia Hughes, in response to basically the Capitol riot, they're calling it in the article, and trying to have legal funds and other funds available for the people who were involved in this organization. Whatever the event, let's just call it that. Stepping all over myself. But what has happened is that in the intervening time, they've raised $900,000, but the state of New Jersey has said, hey, we haven't gotten the nonprofit paperwork from this group yet. And then they've started to look at specific aspects of this nonprofit group. The woman who runs it, the other people on the board of trustees are her sister-in-law and her 24-year-old son. So basically, everybody on the board of trustees for this nonprofit are all in the same household effectively. And one could say there's one controlling person who can speak for everything, and it doesn't make for a very independent board. When they talked to their attorney about that, he basically said, well, this is a feature, not a bug. This is a mom and pop operation, so there's nothing wrong with that. But, one might suggest that having some independence and having some different ways of thinking about things are a positive thing in your nonprofit. The other piece that is starting to be questioned by people on both the left and the right is the lack of transparency. So while they have ushered out some people who have been helped by this organization, there are quite a number of people who could use this money who are wondering, who have you actually helped? Where is this money going? And when they looked into it deeper, they found out that a lot of these funds haven't even been spent yet, while there's quite a few people who need money for legal fees. And these, the person in charge of the charity has gone on to right-wing talk shows and has solicited donations from some big name donors, but yet the transparency of what's actually happening with these funds isn't very clear. And they also dug into the history of the woman who started this charity, and or the one who was named as the charitable board of trustees, and they have found some questionable financial issues in her past. Now, that doesn't necessarily make somebody not capable of running a nonprofit, but if you were a board from the outside hiring a trustee or hiring somebody to be in charge, or if you knew, you're giving to this organization, would you want somebody who has had credit issues, bankruptcy issues, has, had a questionable financial past, or would you want somebody with a little cleaner past? So these are questions that are being raised. So far, there's not a lot of transparency that has come out of this. We'll see if it does. I don't exactly know what their mission and vision statement says and if they're meeting that, but I think that's another interesting part that what we can look at is, at what point is a nonprofit accountable for completing its mission and vision, and who holds them accountable, right? So is it the government? Is it the person who acknowledged the 501c3, or, is it the state agency, which they haven't registered with yet? So, it raises some questions, and it's a cautionary tale that, if you're going to start your own nonprofit, be it political or not, make sure you have your ducks in a row, make sure you have some organizational documents, who's doing what. I would suggest independence on a board is crucial. And we've talked about selecting boards in the past. And, these are people who are soliciting money that is going to be tax deductible. So obviously the federal government is going to get involved, and the federal government is definitely interested in making sure that if tax deductible donations are given, that it works. So, AJ, what are some of your thoughts on this?
No, I think taking the political kind of leanings on this one out of the running, I think it's a really good cautionary tale, I think, for people that are donating to a nonprofit. So if people don't know, 990s are available publicly through either GuideStar or the IRS website. And you can see what somebody spends, in a broad stroke on programs versus in, kind of administrative cost and fundraising costs, I guess. What the 990 will also tell you is how much the executive director or the key employee makes per year in that organization. Well, what do you do when you have a really hot new young nonprofit that hasn't even filed a 990 yet, or worse, that you're giving to somebody that or a cause that you really care about that doesn't have a robust 990? Then maybe they only have like a 990 EZ or one of those postcards because they haven't accumulated enough donations to be required to file for the one. I think it really goes back to, Mark asked in his opening there, who should hold these nonprofits accountable? Should it be the government? Should it be the state? I think realistically, the donors and people that are, giving money to that nonprofit, whether it be state agencies through grants and contracts or donations through private citizens, those are the ones that are really going to hold the nonprofit accountable. As the money goes, the nonprofit goes. And so if you are giving to a nonprofit and you feel like they aren't supporting the mission and vision that you donated to, stop your funding, and I think, lesson learned there. But I think it really breathes in that, like, there's a lot of nonprofits in the world and they do a lot of good. And there's some that maybe are not as like efficient, effective, or, operate in a space that you would like to contribute to. So I think it's on the donor and the grantors and the government agencies to contract with nonprofits that are reputable, have good standing, and you have a good idea of how the money's being spent. So I think due diligence on the side of a donor would really go a long way. If we're being completely honest, a nonprofit that, misappropriates funds or something like that, there's really not a lot of recourse that happens. If you're in a federal grantee situation and you misappropriate funds, that governmental agency will probably ask for the money back. But what happens if you're a private donor and you donate, a couple $100s to a nonprofit and you don't think it was spent correctly? There's not a lot of recourse there, to be completely transparent. Like your state agency that oversees nonprofits really, unless they're a big fish, they're not going to spend government resources to go after small nonprofits for like a $500 donation. So it's really on the due diligence of the person that's giving the money to the nonprofit to do their due diligence beforehand and understand if that money is going to be used correctly. And I think it goes back to what we've said on this podcast a lot, goodwill and being transparent with your donors and relationship building in the community is like paramount for a nonprofit to maintain an air of transparency and be able to stand on good footing to present financial results or program results or volunteer results with the general public and the donors to be able to accurately report on what's being done in the nonprofit. So I'd say, I have strong feelings about, how a nonprofit operates and how that money gets spent and, the administrative costs behind running a nonprofit. But I would say to do your due diligence and at least get in broad strokes if a nonprofit is operating in the way that you see fit to give your money to them.
Yeah, AJ, I just want to ask a follow-up question because I actually don't know the answer to this question, but does the federal government who issues the 501c3 or 501c whatever, do they have the ability to claw that back and then charge you back taxes if they find you've been a bad actor?
So they do have the ability to claw it back. Part of the 990 is a public charity calculation that happens. So it takes a percentage of how much money you earned and where the sources of it, and it does a calculation. And if you're under that percentage for a couple of years, then you lose your nonprofit status. That's one way that it happens. Egregious acts can get it pulled. I'm not super clear. I'll have to do some research on clawing back like taxable income from prior years once you've had your nonprofit status stripped. But be aware that these are extreme cases that a nonprofit would have a government entity step in and strip them of their 501c3 once they've obtained it. A lot of times a nonprofit will essentially, it's not a bankruptcy, but they will cease to exist and have to transfer their assets to a different kind of complementary nonprofit is usually the wind down on a nonprofit. But if you get your 501c3 stripped, you're in pretty bad shape even before that, because if the public support test that exists on the 990 is, it's pretty straightforward. You need I forget the percentage, but you need a certain percentage of your donations and money coming into the organization that's considered from the public. And so to be able to be a public charity. And normally private foundations and it's a gray area on whether or not governmental assistance falls in that category of, it's a gray area in that 990 if governmental assistance, either from a state or federal agency, counts as public donations. So I would say, it all goes back to, staying focused around your mission and vision. And if you have a problem with a nonprofit. I would say it's not that you can't get traction from a governmental agency or a state agency to investigate them. I'm just saying it's not likely that anything will become of it for low dollar amounts, you know?
Yeah, and it's probably even less likely that NPR is going to cover it. So
Absolutely.
Public support is key. AJ, I think you got our topic for us this week.
Yeah, thanks, Mark. So our question this week is, where is the line between restricted and unrestricted account for accounting purposes? So the question came in, obviously, if a grant comes in, it should, and it's for a specific purpose, it should be restricted. However, I'm running into a lot of grants where they claim it's for a purpose, but there's no budget and no reporting guidelines. So for accounting purposes, do I still need to create an account for this funder and allocate staff and time costs to it? So, and they essentially end it by saying, I don't see any point in doing so. I thought this is a great question because I think often, especially in a small nonprofit, people are often confused by what's, you know, considered with donor restriction and without donor restriction. And so I thought maybe we could delve into, you know, making that a bright line distinction in how you differentiate between unrestricted and restricted money. So, Mark, do you want to take a stab at this first and kind of give your musings on this?
Sure. Yeah. I mean, restricted money, first of all, is going to always be restricted by the donor, right? Not by the organization itself. So you'll sometimes hear that the board has restricted money or board designated funds are a common term. But if the board designates money, it's not restricted unless there's a donor on the board, and then it's, again, donor restricted. But you want to have clear guidance from the donor as to whether it's restricted. A grant, unless it's specifically for, you know, use it for whatever you want in your organization, a grant almost always is restricted money, right? Because they want you to use it on a specific program for a specific use. So with this question, you know, should I take the time to track my expenditures related to this? I think the safe answer is yes, right? Because at the outset, they might not ask for something up front, or they might not have super clear policies, but they might ask you for a report at the end. And if you haven't tracked this, then you could get into a heap of trouble because you aren't able to coordinate this. One thing I noticed when I was working at an organization that had a ton of different grants coming in, and there were salary allocations, there were supply allocations, utility allocations, all sorts of different kinds of allocations. It was super important that they tracked it very carefully because you don't want to be double dipping, right? That'll get you into real trouble, especially in an audit. I don't want to have somebody who is working on two projects that I'm allocating their full salary to both projects just so that I can meet that threshold. So tracking is going to be very important so that, you know, if somebody makes $40,000 a year and they're working on 4 different projects equally, you're going to want to, you know, give 10,000 to each of the projects for their work time, as opposed to, oh, we need to squeeze a little more in order to meet the threshold of this restricted money. So let's put 20,000 here and we'll put 10,000 in the other 3. Well, then you've over allocated, right? So keeping track and keeping clear with these kinds of things, doing the allocation work, over allocating, is never a waste of time, because it's going to also help you determine metrics on future projects. Well, how long did this take for that last project? And I think, you know, restricted money, while it may live in a different place on the balance sheet than unrestricted money, it still needs to have its own bucket. And there's, you know, we've talked in past podcasts that there's numerous different ways of doing this, whether you have sophisticated programs or whether you're just using an Excel spreadsheet. But, you know, I tend to lean on the side of track it if you can. So AJ, what are your thoughts?
No, I wholeheartedly agree. To specifically address the question from the viewer, it's really a grant or a donation is restricted by the donor, like Mark said, for timing or purpose, so it can be restricted for a purpose or a timing. In the question, they claim it's for a purpose, so full stop right there, it's a restricted grant. And I would go further and say that, you should have all of your staff, including salaried executives, anybody that's performing any kind of duty within the organization, to track their time and effort spent by the hour on anything that they're working on. And that's a great administrative burden to put upon your staff and yourself, but there's a reason behind it. If you have a grant from somebody, essentially, and most grants, especially if it's from a governmental entity of some kind or a state agency, you may not be subject to an external independent audit. But be sure that if you're getting grant funds, you are subject to what's known as a funder audit, where they come in and they specifically audit the expenditures and your recording of your books and records and your control system around the money that they gave you. And being able to whip out, timesheets and allocations based on efforts spent in a certain program goes a long way in providing that. And if you fail those funder audits, they'll usually either rip funding from you, ask for money back, or you won't get funding from them again. So I think it's vitally important that nonprofits look at this. The other part of that is something that Mark mentioned. If you're not tracking time and effort here, look, the driving force behind most nonprofits is personnel. If you look at a profit and loss statement from a nonprofit, 99.999 times percent times the largest expense is personnel. And so being able to track their time and effort spent will give you a better idea of how to budget in the future. If you're applying for grants that have full, even if you're applying for grants that aren't based on full-time employees or a fraction thereof, you need to know how long it's going to take your staff or your nonprofit to complete something, and having historical data on that is vital. And so I think, budget to actuals, being able to track this grant and understand, so I would say really think of almost every grant you're getting as restricted, unless it says on the face of it that it's for organizational purposes, or capacity building. Those are the only two grants that I've ever seen that are unrestricted. But for the most part, they're supporting a purpose and a program, and are restricted by that donor intent. So,
yeah, one other thing I just want to jump in, AJ, is the thing this reminded me of too is if you're tracking each grant and you're tracking your executive time too, when it comes time at the end of the year where you get to do that so fun functional expense report, it's going to be a hell of a lot easier if you can already say my executive director spent X number of hours or this percentage of time on different programs, so that when that functional expense report comes out and you can allocate your admin, fundraising, and program costs, you can actually have backup to justify, yeah, my program costs were this.
Yeah, great point. I mean, just, being able to tell who did what when, goes a long way in your organization of, even internally being able to monitor what somebody's doing on a daily, weekly, monthly basis and where their time was spent is invaluable, even if they're a salaried employee. So, we could drone on all day about allocations and how to do this and time and effort spent and what's considered administrative costs and program costs. But I think, the good starting point, and this sounds like a pretty small nonprofit that this person is in, is make sure you're tracking time and make sure you're tracking your grants either through your accounting system or, like Mark mentioned, in an Excel sheet, because it may not become apparent why you would need that right away, but trust us, at some point you will need that information, and it's easier to have it already in place than to try and implement this stuff on the fly and retroactively look back at this stuff. So.
Absolutely. All right. Well, I think that was a great episode, AJ. Thanks for joining me. And thank you everyone out there for joining us for another episode of Profitless on Purpose. Easy for me to say. We really appreciate you joining us. And we always appreciate your interactions, either comments in the YouTube video or on Twitter @ProfitlessPod. And I think AJ in the near future is going to be making some accounting TikTok videos. Anyway, so please join us next time. We'll see you on another episode of Profitless on Purpose.
Thanks, everybody.